Now to our Corporate Watch segment. This week we're looking at the growth plans of the medical services provider Healthway. With an improving economic outlook, Healthway is aiming to grow its presence in its home base in Singapore and at the same time is also seeking opportunities in major cities in China. Money Mind's Dominic Low has more.
If Healthway Medical had its way, Singaporeans would never be too far away from one of its clinics or medical services. At last count, it offers medical services at more than 90 locations in Singapore. 70 of them are primary care outlets and they account for 57% of its core business. Healthway's Specialist and Wellness Division contributes another 40%, and the rest come from its Benefits Management and China Healthway divisions. 2009 has turned out to be a pretty good year for Healthway. For the first 9 months of 2009, revenue topped 76 million Sing dollars. Compared to 2008, it was 31% more than the 58.2 million it collected in revenues. Profit also improved from 7.2 million to 12 million in the same period. That's a rise of 67%. But Healthway isn't stopping there and intends to grow the number of its medical outlets in 2010. It's hoping to have a total of about 200 medical establishments in Singapore within the next 4 to 5 years. For a start, it's opening 5 new medical centres and will add more services in the first quarter of 2010.
In terms of the rate of growth, I think the one with the most potential is medical and dental aesthetics. The techniques, the technology have improved over the years, so making many procedures safer and more effective for the patients, of course under trained hands. We are also investing in larger centers for such services, in better locations, in more central locations. We are also getting more skilled doctors in. So for us, we will see the best rate of growth in these two areas.
Medical tourism is another sector that Healthway is eager to tap into. And to do that, it believes quality and transparent pricing will be key, especially when regional competitors, such as Bangkok, are offering cheaper alternatives that continue to attract clients.
It doesn't have to be the cheapest in town, but as long as your pricing is transparent, so that people can compare, so that they feel they're not taken for a ride, then it will be positive.
Over the next 3 years, Healthway is also looking beyond Singapore and making an even bigger presence in the Chinese market to achieve its growth target.
The government is very keen and is very serious about ensuring that its citizens are able to have good, affordable healthcare. For cities above 5 million population, there are so many, probably more than 30 of them. So it is indeed a very big market. So coupled with the fact that there's a push from the government to ensure they're able to provide good healthcare to everybody in China, therefore it is a very good opportunity for a company like ours, which is very familiar with operating a large chain of medical facilities, to be involved in it.
Healthway believes the outlook for the healthcare industry looks good in the year ahead. It's Singapore's aging population, demand for preventive healthcare, and even aesthetic medicine and dentistry are factors that will drive its growth.